there's a lot of chaos out there right now, whether it be in economics or people think with real estate. And so people are freaking out online all over the place. Today, I'm going to be walking through our monthly market update where we're talking through inventory, interest rates, where things are going. I'm going to talk through a lot of that data because we're not looking to exaggerate anything. Let's look at what the data is actually showing us so you can know what's actually happening. What's up, everybody? Welcome back to Real Talk Real Estate. I'm your host, Mark Cannon, local realtor here in the Phoenix area with my home group real estate and owner of the Benchmark Real Estate team. As always, guys, this is a podcast format, just here to be real with you. I'm not editing what I say and all that stuff, just trying to give you accurate information so that way you can make the best decision possible. So welcome to the second quarter. Can't believe it's already April, guys. That's crazy. I hope everyone had a great Easter. So for me, I'm sitting here going, okay, we're already in the second quarter, and I've started to see an uptick in all these videos of the world's collapsing, blah! And even in real estate, there's people who have been saying the real estate market's going to crash since 2021, and they've been wrong still. We're correcting, but we're not crashing because we're mirroring the 80s. I mean, I really believe that's what we're doing. We're mirroring the 80s where super high inflation had record lows of, homes, home transactions, and then there was like a stagnation for several years, and then it picked up again. I think that's what we're going to mirror, but we're going to talk through everything here in our monthly market update. I'm going to talk through some stuff with the 10-year Treasury as well, so that way we can talk through that. So let's get through it. Don't want to take too long. Where do we always start? How many homes are on the market? So we've been hovering for probably about 6-7 months, about the same level. We're about just over 25,500 right now. And so, and we're still hovering that range. Around 25,000 is about a balanced market as far as inventory goes. Now, we just have lower demand right now, which is why we're more in like buyers/balanced markets and many markets. And so we're going to talk through that. Let me show you the Cromford report real quick. If you're not familiar with the Cromford Report is a local company that does data on Phoenix. Again, I take it all with a grain of salt. Like anything, I don't just look at stuff and go, Eureka, that's the truth. I'm like, okay, let me analyze this. So anything above 110 is a seller's market. Anything below 90 is a buyer's market. In between 90 to 110 is a balanced market. So as you see here, Chandler's at 154. So in their estimations, well into a seller's market. Fountain Hills, same thing. And then you go down the other side, Buckeyes on the bottom, Maricopa's on the bottom. Pretty much a rule of thumb, the farther you are out from the middle of Phoenix, the more you'll be in buyer's markets or hit harder. So the funniest thing about this is, like, when I look at this, I view most of our markets as balanced or buyers. I don't really see a whole lot of sellers markets. Now, are there markets that are selling at a higher clip? Sure. Like Chandler, Fountain Hills, Tempe, sure. Maybe their days on market isn't as long. But I'll show you an interesting stat of the screenshot here of Chandler. And this is, so it takes into account the supply and the demand. This is from Armless. And then it puts them together, and what do you have? And it says a buyer's market, which is the complete opposite of what Cromford's saying. So it's just interesting to me. I think the truth is in the middle of those two. I think it's more of a balanced market where you can negotiate still. Homes are still selling, but they're not selling as fast a clip as they were, several years ago. And, it's not like they're sitting for 120, 150 days. So I take it all with a grain of salt, but there are still markets that are moving. My rule of thumb here in Phoenix is if your house is mostly updated or completely updated and it's priced well, it'll sell. Those homes sell pretty quick. Like I'm looking with buyers right now, and homes that are like really well put together, they don't have to be fully updated, but if they're mostly updated, those things will sell. Or if the big stuff is updated, like a roof, AC, flooring, maybe a kitchen, bathrooms, something like that. Like if a combination of some of those are updated, they'll sell because people don't want to do that themselves. If homes are original, they sit. And you can get some decent deals on those if you're willing to be patient with that. So it is interesting, but let's talk about interest rates. So just so you know, I know some people ask about inflation. Inflation has been holding steady, I think around like 2.4% for a while. So that's why we don't talk about it a ton right now. But when we look at the 30-year fixed mortgage rates, a lot of people have noticed that we went up. We were sitting at around 5.996%. It was awesome at the end of February. And then stuff with Iran started happening, and we jumped up. And now today we're sitting at 6.43. I almost said 4%. I wish it was in the fours. 6.43. And you have to understand, the mortgage rates don't follow the Fed. They follow the 10-year Treasury. And people go, okay, what the crap is that? If you're not familiar with the 10-year Treasury, and again, I'm not an expert on this, 10-year Treasury is talking about the bond yields, and they a lot of times compare this to mortgage-backed securities. That's why they always say 10-year Treasury is what dictates mortgage rates, not the Fed. And so what we see is when uncertainty happens, and like the war and then different things economically that are happening across the world and even in the United States, we see that number go up. So then interest rates go up, right? And so that's where my hope and prayer is that this kind of gets settled out and then those numbers come back down and get us back into the high fives, because that's what we were anticipating. No one was really anticipating a war. And then that happened and it kind of threw things for a loop, because I thought we were on track by the summer to be in the high fives fairly consistently. So hopefully that can still happen. We'll see. But when it comes to the 10-year Treasury stuff, if you guys have questions on that, let me know. I'm more than happy to talk through any of that with you that you have questions on. And if you're thinking about buying or selling, I would love to talk with you, because my goal is to give you information to be able to help you make the best decision. I work through relationships. It's real estate through relationships, because I'm more worried about the relationship than the transaction. So if you're listening to this and you're like, hey, I'd love to reach out, my information's right here. I'd love to connect with you, take you to coffee, sit down and talk about what your goals are, what you're looking to do. If you're not ready to buy right now, but you want to in the future, let's create a goal. Let's create a map, a game plan for what's going to happen. Guys, you've been listening to Real Talk Real Estate. I'll catch you next time.